Thanks for joining us today on Market Call. I'm Morella Fernandez. Martin Cobb with us on the show, Senior Vice President, Equities, Lorne Steinberg Wealth Management. He'll take your questions on global and North American equity. So here's how to reach us. 1-855-326-6266. You can email questions as well, Market Call and at bnnbloomberg.ca. Martin, good to see you. Thanks for coming in.
Good afternoon, Morella.
Let's talk a little bit about what has been happening in the fall. You are looking at tech, which has pulled back a little bit, we should say, but you're saying a lot of the economy's growth actually does rest on tech. Does that worry you?
Yes,
okay.
In a word. I was surprised looking at some of the GDP data over the last 3 quarters, how much tech capex has played a part in driving GDP growth. The last quarter, it was more important to GDP growth than personal consumption, which is a huge part of the economy. So here we have a stock market that is dependent on tech capex, and we have an economy that's increasingly dependent on tech capex. I find that a little bit worrisome.
Okay, so let's talk about over-evaluations versus, which people have talked about for a long time. You know, they're concerned that growth will stop or slow down, and those companies that are overvalued, that bubble will burst. But you're worried more about specific, maybe smaller bubbles. Can you explain that?
In a sense that, you know, within certain pockets of the market, the one thing that doesn't matter in the short term for the market to go up is valuations. You know, Alan Greenspan, the former, chair of the Federal Reserve, talked about irrational exuberance in late 1996. And then the market went up in 97, 98, 99. Before all it went a little bit pear-shaped. So we're just recognising some areas where there's just there's no return on investment in a lot of the AI spend. I mean, OpenAI, the poster child, makes no money, spends a lot of money, and there's a lot of beneficiaries of that, and we own some of them. But ultimately, there has to be a return on investment. Without that, effectively, we're in a bubble. And history tells us roughly 3/4 of innovations over the last 150 years have resulted in some sort of bubble. Why would we expect artificial intelligence to be any different?
Will it be sort of a tale that gets told later? Is it too early for some of that realization? Because that's what some are saying. You know, early innings yet, wait for, 6, 7, or 8.
Yeah, I started my career in the early 1990s, managed money for the first time in the late 1990s, and the irrational exuberance, I say, can continue for an awful long period of time. But at some point, there has to be, some return on investment, and we're not seeing it yet. The narrative is still very strong. Organisations are throwing money, like SoftBank, investing in OpenAI, etc. And that will continue for a time until it doesn't. And at that point, it could be quite nasty.
What are you thinking for the Bank of Canada for next week as far as a rate announcement goes?
Last I saw, the probability of a rate cut was above 80% now, so almost a shoo-in for a 25 basis point rate cut. The last 3 months have seen a sea change. The jobs market has been very poor. The housing market is moribund. Inflation seems to be under control. So it looks like we'll get a rate cut of 25 basis points next week, alongside the Federal Reserve doing the same, or maybe even more. Okay,
we are going to take a quick break, but I do want to let viewers know that the Prime Minister, Mark Carney, is in Edmonton today. He's going to make an announcement about the nation-building projects. Expected several large-scale projects to be announced, to be revealed. So we're going to take you there when it gets underway. That's expected in about 15 minutes. But we'll be back with Martin Cobb of Lorne Steinberg Wealth Management to take your questions when we come back. Stay tuned. Welcome back, and thanks for joining us on Market Call. Martin Cobb with us today to take your questions. We will start right now with an email from Ash, who says, I'm tempted to enter a position in Dutch Brothers on the New York Stock Exchange, but their valuation is holding me back. So what do you think of that? Is this a company you're familiar with?
Yes. Yeah, and I think Ash has answered his question for him. So Dutch Brothers, just to explain, is the 3rd largest coffee chain in the US. They have just over 1,000 stores in about 20 states. Now, compare that to Starbucks, which has 17,000, Dunkin', which has about 9,500. It's by far, the minnow in terms of that number 3 position, but a long runway of growth. It has been growing at an exceptional rate, opening stores quite aggressively, but that growth rate is tipping down. It used to be 50%. It's now more like 25%. Expectations, the sales growth will just slow. It's a big company effect. So to answer Ash's question, the problem is, even if you believe they don't put a foot wrong, it's on 50 times 2017 anticipated earnings for a coffee shop chain. I think that answers your
How much
question.
Coffee do you have to sell for that?
Exactly. So I think it's priced for, if not perfection, it's up there.
Okay. Let's move to the phone lines then. From Waterloo, we have Michael on the line. Hi, Michael.
Yes, thank you, Martin. I'm sure you've heard of Adobe. Unfortunately, I own it, and I'm down 20%. Their earnings is this evening. Question is, I think you like the stock. Question is, how long do you hold the stock if it's not performing? I'm willing to hold it for a long time, but what are your thoughts on Adobe?
Yeah, good question, because people do want to know when things take a move, how long do they hang on? I'm sure there's not a simple answer to that.
There is no simple answer to that, and an absolute hostage to fortune here because we have earnings tonight. So who knows what happens. But if you actually look at what's happening with Adobe versus the narrative is very negative, that large language models and all the applications that come with them in terms of video and photographic generation are going to eat their lunch. But Adobe continues to add something like 10,000 subscribers a day to its Photoshop suite. It continues to deliver, it might not tonight, but it continues to deliver good, solid top-line growth and underlying earnings growth on a very strong basis. And it's trading on half the valuation that it was 12 months ago, half the valuation that we've typically seen. So I would say your margin of safety with Adobe is very high. With a long-term view, they're investing heavily in their own AI suite of products. You are buying more than just Photoshop. You've got the document cloud business. You've got lots of CRM software. Adobe on the cheapest valuation you have had for the past decade. That to me is a very attractive risk reward.
So if you own it and your heart's dropping because it's down, he's at 20%, just hang on?
Again, you can be informed by the stock market or you can take advantage of it. In this case, I would argue you take advantage of it and hold it for the long term. It's a great business.
Got it. All right, let's go to another phone call. Andre's on the line. He's in Chilliwack, BC. Hi, Andre.
Hello?
Oh, sorry. Elliot, are you there?
This is Elliot.
Hi, Elliot. How are you? Sorry, I skipped a line there. Elliot's in Hamilton. What's your question today?
Thank you. Against the macro backdrop in North America and internationally, at this point in time, would you prefer banks or insurance companies? Thank you.
Thanks for the question. And would you sort of compare between the two?
Yeah, it's interesting. Banks are liquidity poor. They give money away and hope to get it back. And insurance companies are liquidity rich. They get money in and try not to give it back. And it's interesting. We're sitting in an environment today, whether it be south of the border, particularly on the investment banking side, the Goldman Sachs, the JP Morgans, but even up here, where bank valuations are up there. We've seen some of the valuations we've not seen since the global financial crisis. Whereas insurance companies are more asset gatherer type businesses. If you think of Sun Life and Manulife, it's less to do with insurance, it's more to do with asset gathering, long-term growth demographics, particularly in Asia. So we like both, we own both, but today in terms of the marginal dollar, I put it towards insurance companies typically. Be selective though, and versus some of the banks where we might take some money off the table. Be
selective, why?
Because insurance companies, there's not one is the same as the other. So if you look at in Canada, Sun Life, Manulife have some similarities, but they've got very different growth trajectories in some parts of the business. You have property and casualty insurers, you have the reinsurers, the Fairfax type businesses, etc. So there's a lots to choose from in insurance, and it's very complicated. Their accounts are opaque, to say the best. But ultimately, valuations there are more attractive today at an aggregate level than in the banking sector.
Okay, so you have to do your homework on that one. Yes. Let's go to Andre now, who's in Chilliwack, BC. Hi, Andre.
Oh, good morning, Morella. Thank you for taking my call. Mr. Cobb, could I get your thoughts, please, on Tech Resources? Maybe just a comment on the acquisition. Do you think the stock is undervalued? Where do you see it going forward? Would you be a buyer of it? And do you have any mining stocks in your portfolio? Thanks. Have a good day.
Three-part question right there. Okay, so Tech, of course, being merging with Anglo-American, big British owner and moving their headquarters to Vancouver, which many are applauding. However, the stock was down when they sold this. So I'm just wondering what you think of this agreement.
Yeah, it's a no premium deal. I mean, effectively, the offer came with a special dividend from Anglo to their shareholders. Ultimately, it's a merger of equals to some extent, which obviously has disappointed a number of investors. It looks like a bit of a sewn-up deal in terms of the insiders as well as getting the politicians on board. But I suspect every other large mining company, we've had bids for both companies before, is probably going to be running numbers on this and trying to intervene to some extent. Whether or not they'll be able to do that and satisfy the political aspect as well is probably quite hard. I like copper. If you look at electric vehicles, etc., there's 10 times as much copper as there is lithium in an electric vehicle car, and lithium is pretty abundant. So great demand story for lithium, but there's tons of it around, whereas copper's harder and harder to find. The ore grades, deposit levels, etc., are falling all the time. So long term, like copper, this will be a copper-dominated company. may well see some additional interest, but the combined companies, particularly what they can do in Chile with the two neighbouring mines, putting them together, greater synergies, there's a lot to like about the deal. So we don't own mining companies, I've said before. The reason being they're not particularly good businesses. They dig a hole in the ground, 10 years later they sell it and they hope to make some money. But this one looks like an interesting one if you want some copper.
Yeah, there's a lot of risks and challenge involved for those companies. We know Teck Resources is having a problem with the mine in Chile, which they're looking for help on. All right, we are going to take a quick break. Martin Cobb sticking around, but we're also waiting to hear from the Prime Minister in Edmonton, so we're back in a moment. Stay tuned. Welcome back, and thanks again for joining us on Market Call. We are going back to an email from Sarah. She says, Martin, do you see upside to 250 for Royal Bank in the next 6 to 12 months? Very specific timeline as well. Royal Bank, last I looked, let's pull that up in a moment, was hovering at 200, I think, was the last time I checked. What is your take on Royal Bank and whether it has that possibility of that kind of growth moving up? So this is New York Stock Exchange. We'll try and pull it up on the TSX.
Yeah, so it's about 200 Canadian, so upside to 250, 25% return in 6 to 12 months. So if you were to take any company at random, and just to, what's the chance it could be up 25% in 6 to 12 months? Look at something like 20% probability. So you've got a 4-to-1 against kind of bet that the stock would do quite well. So I wouldn't take that bet unless I was being paid, appropriate odds. What I would say about Royal Bank, we do own it. We like it. We've owned it for some time. The premium for the quality, it's by far the best bank in Canada. The premium for quality today, to me, is a little bit excessive. So we prefer some of the other banks. We preferred CIBC and maybe more recently TD and maybe BMO or even a Scotia Bank. So we like RBC. It's the best bank in Canada, but sometimes investors pay too much for that quality premium, and it feels we're kind of there today.
Okay. We hope that helps. Sarah, out as we move to the phone lines. John is calling from London. Hi, John.
Thanks, Martin. I appreciate your macroeconomic arguments. I would add that competing for stocks in the open market for the retail investor in a non-margin account is a form of personal consumption when you think about it. My question's on Dollarama. I stayed away from tech because I could hear your tone on it. Bought Dollarama a long time ago, and it's done well, and my family's in it now. People are insatiable with their desire for shopping there. How do you like the next 2 to 3 years for Dollarama? Thanks very much, Mark.
Thanks for the question, John. Go ahead.
We own Dollarama. We've owned it since the fund was launched in 2020. Great place to go buy anniversary presents, I always think, for my wife.
I'm sure your wife is very pleased by that.
Yeah. The only thing I would say is it's done nothing wrong, and investors have fallen in love with it to some extent. So we would be taking some money off the table. We still like it for the longer term. It is reaching saturation in Canada, so it's having to go abroad, Latin America, and now Australia. And that is a sign that there are 3 Dollarama stores in Orangeville, near where I live, 29,000 people. That's telling me that they have a lot of stores around the country. So still like it, but the valuation at above 40 times this year's earnings is up there to some extent.
Okay, so would you still dip in at this point? You mentioned the reject shop, I think, deal which they have in Australia. Are there synergies from that?
They're small. I mean, if you look at the money they spend in Dollar City in Panama and the reject shop in Australia, it's a few percentage points of the market cap. So they're not particularly big, but over time they may become a bigger part of the pie. And international expansion can be good, but also can be problematic. So I'm worried a little bit about the growth rates in Canada slowing and not being offset by the size of the businesses that they look to purchase. So just be mindful. With a long-term horizon, it's probably okay, but maybe taking some money off the table and even buying back in at a lower valuation might be a better strategy. All
right, good point. Let's take another email as we wait for the Prime Minister, who's expected to speak at any moment in Edmonton. Robert says, can I get your perspective on Fairfax Financial, please? We were talking a little bit about sort of insurance versus banking. What do you think of Fairfax?
Yeah, here's another one, actually. Like Dollarama, we bought when we launched our Canadian dividend strategy in early 2020. It's done exceptionally well for us. The reason being, they've done a number of things right. They used to be quite acquisitive and issue shares. They had some big calls on the market. They have bought back shares more recently, been much more disciplined on investments. A good underwriter, but the stock is up 4-fold and now trades on the highest valuation we've seen for quite some time. We've been taking some money off the table.
Got it. All right, we are going to go to the Prime Minister. He's just being introduced in Edmonton, so we'll show you the shot here. This is the announcement expected on nation-building projects. So, again, the Prime Minister has tried to fast-track the project's approval process, so get shovels in the ground faster and through that paperwork process in Ottawa. So we're expecting about 5 different initiatives to be announced today, one of them being on LNG and other sort of projects in that sort of same pipeline. Let's go live to Edmonton and have a listen in as we get introduced to the Prime Minister, Mark Carney.
The shifting global landscape is pushing us to act decisively and to focus on what we can control, building strong communities and making smart investments that return real results. Since we took office, we've been really focused on the economy, and in the first month, we passed legislation to reduce internal trade barriers. And since then, we've launched the Major Projects Office so that we can get big things built again in Alberta, across the prairies, and across the country. It's no coincidence that this new office is located right here in Alberta, and I'm so thrilled to see our province positioned at the heart of our government's vision. The office will help streamline the process of getting projects built, creating certainty and efficiency. L'annonce aujourd'hui sera la première qu'une série d'étapes importantes.
It will be the first one of many steps to come up. Great project, major project for Canada that will be strong.
Now to the podium, someone who spent years in the energy industry leading large, complex companies. She's highly regarded as one of Canada's most accomplished business leaders, and she's the new CEO of the Major Projects Office. Please welcome Dawn Farrell.
Hello, and thank you, Mr. Olszewski. It's a pleasure to be here in Edmonton today, my home province. It is a distinct privilege to serve all Canadians in the role of CEO of the Major Projects Office. It's daunting and exciting, and it is so very personal to me. To have an opportunity at this important time to impact our skills as a country, to execute projects that are bold, sustainable, and economic, and that fit our collective values as Canadians is truly an honor. This is really a defining moment for Canada. And the work of the office is being defined as we speak. My vision is a small team with a big reach. To be successful, we know that Canadians everywhere will step forward, work in teams, find solutions, and solve problems. To get to one project, one review, one decision in a 2-year time frame will set Canada apart globally and will attract enormous inflows of capital. To be able to meet this time frame without cutting corners and within our values as Canadians is a giant puzzle to solve. I now truly have the very best job in the whole country. So, we are hitting the ground running and on our front foot. Yesterday, the government announced the members of the Indigenous Advisory Council who will help ensure that partnership and Indigenous economic participation are embedded in our work. Today, Prime Minister Carney will announce the first set of projects and strategies to focus our work. We currently have a dedicated team of first-class professionals helping us set up the work plans and finding the people to form the teams. It will take some time for us to hit our pace, but with all the help that is pouring in from people everywhere across Canada, we will be successful and out front, and we are sure to finish this race in record time. Today, Prime Minister Carney has some great news to share on our first steps. Imagine that. I'm 11 days into the job, and I already have a plan. It doesn't really get any better than that. So it is my pleasure to pass the floor to Prime Minister Carney.
Good morning. Thank you. Bonjour tout le monde. Thank you very much, Dawn, for that introduction, for bringing your leadership to this task. Thank you, Eleanor, for helping to build Alberta and Canada strong. We're incredibly grateful to be hosted today by the Alberta Carpenters Training Centre. the women and men with us today will help build Canada strong. And I just want to say as well, Finn Johnson, Kim Letwin, and all the team here at the Union of Building Canada, Local 1325, thank you for the fantastic work you're doing here, and by extension at job sites across Edmonton, across the country. Also, I want to take a moment to salute the union leaders, the great union leaders from across this country, from across the trades, who are here, who will build Canada. It's always great to be back in the city that raised me, a place that I learned my values, values shared by the people behind me, values of hard work, values of sticking together, solidarity, and the value of ambition. That's why I came back here to Edmonton in early January to launch my leadership, because Alberta has always been home to builders, to entrepreneurs, and to innovators. The people we need now as a country more than ever to build the strongest economy in the G7. And Canada's new government's core mission, our mandate, is to empower Canadians by building Canada's economic strengths. That's how, in uncertain times, we will create greater certainty, greater security, and greater prosperity for all Canadians. It's how we will create economic opportunities that help Canadians not just manage through this crisis. We will manage through this crisis. Our goal is to prosper from it. Now, I want to continue to be clear with Canadians that the path ahead will not always be easy. Because what's happening now in the global economy is not a transition, it is a rupture. The United States is fundamentally and rapidly transforming all of its trading relationships. And the effects are both immediate and profound. They're closing markets, disrupting supply chains, halting investment, and pushing up unemployment. Canadians are over the shock, but we must always remember the lessons. We have to look out for ourselves, and we have to take care of each other. As Minister Olszewski said a moment ago, we know we can't control what other nations do. So we're focused on what we can control, building our strength right here at home. And the initiatives that we'll announce today will help transform Canada's economy from one that had become too reliant on a single trading partner to an economy that's resilient and dynamic, an economy built for Canadian workers and their families on the strong foundations of our industries and new, diverse trading partners. That's how we'll build Canada strong. Now, Canada has a long history, a long, proud history of building. In our earliest years, we were unified by a national railway. In the decade after the Second World War, we built hundreds of thousands of homes for returning heroes and their families. In the decade before I was born, tens of thousands of blasters, steel workers, road workers, carpenters started the construction of the Trans-Canada Highway. In just 5 years, during the 1950s, the St. Lawrence Seaway was brought to life, with 7 locks stretching over 300 kilometers, linking the Great Lakes to the Atlantic Ocean. Since then, it's transported more than 3 billion tons of cargo. A few years later, Canada built Expo 67, the World's Fair, which went from concept to completion in just 4 years. The point of these examples is that we used to build big things in this country, and we used to build them quickly. It's time to get back at it, and it's time to get on with it. That starts with getting out of the way. For too long, the construction of major infrastructure in Canada has been stalled by arduous and inefficient approval processes. Uncertainty, red tape, duplication, complicated review processes have held back and curbed investment. One of many studies has shown that the regulatory requirements in Canada have increased by more than 40% since 2006. And that's been suppressing investment growth by 9%. Right now, to receive an approval, major projects must undergo numerous reviews and assessments that often happen one after the other, instead of running in parallel. For too long, when federal agencies have examined a project, their immediate question has been, why? That changes now. From now on, Canada's new government starts by asking ourselves for major projects, how? How can we do it bigger? How can we do it faster? Nous avons fait campagne en promotant d'accélérer la réalisation
to accelerate the great project that we will be making. We will work hard to realize and to accomplish our mandate. In last June, the bill was adopted to build Canada, to give us more latitude to go on with the major project.
You just heard, we opened the new Major Projects Office and headquartered it right here in Alberta. It's a single point of contact to get nation-building projects built faster. And we appointed the incredibly hard-working Dawn Farrell to lead this new office. She brings 4 decades of experience in energy and infrastructure, and a proven ability and enthusiasm, best job in the country, proven enthusiasm to get things done. The Major Projects Office will help to structure and coordinate financing for our major projects. And it will accelerate those projects by creating a single set of conditions and reducing the approval timelines for those projects to a maximum of 2 years. Now, part of changing how we build is to build in true partnership with Indigenous peoples. And to begin that, this summer I hosted 3 summits to engage First Nations, Inuit, and Métis rights holders on their priorities, and to explore the opportunities for equity ownership and broader economic benefits from this generational transformation in the Canadian economy. Yesterday, we announced the membership of the Indigenous Advisory Council. This is comprised of representatives from First Nations, Inuit, Métis, and modern treaty and self-governing partners. The members bring deep expertise in economic participation, impact assessments, and UNDRIP. And the Council will ensure that projects move forward in true partnership with Indigenous peoples. Bâtir un Canada fort veut dire bâtir ensemble.
We will do it together. Be clear. We will build what people and what Canadians are looking for.
The major project must strengthen Canada's autonomy, our resilience, and our security. It must have clear benefits for Canadians. It must have a high likelihood of being completed. It must contribute to clean growth in Canada's climate goals. And it must advance the interests of Indigenous peoples. We'll advance projects that turbocharge and connect our regional economies, as well as our economy to the world. Projects that diversify our products and markets. Projects that create hundreds of thousands of high-paying careers, good union careers for our workers. Everywhere from trades to the technology. Now, another crucial point. These projects will be at the heart of our new comprehensive Buy Canadian policy. Because to strengthen Canada's independence, our resilience, our security, we will build with Canadian steel, Canadian lumber, Canadian aluminum, and by Canadian tradespeople and engineers. We will be our own best customer. So today, as you know, Canada's new government is announcing the first set of projects that we believe are both in Canada's national interest and are feasible to be built. The proponents behind the first tranche of these projects have already done much of the hard work. They've undertaken already extensive consultations with Indigenous peoples, consultations that meet the standards of existing legislation. They've worked extensively with provincial and territorial governments and local authorities and already meet many of the necessary regulatory standards. The government is referring them to the Major Projects Office to be shepherded across the finish line. The office will help these proponents achieve any remaining regulatory and permitting approvals and, importantly, secure the necessary financing. Critically, the office will recommend to the federal government the best course to complete each project approval quickly, so proponents can make smart investment decisions. This is the first tranche of projects. We expect the second tranche of projects to be announced by the Grey Cup. So these first projects are, and I'll go them in order. First, LNG Canada Phase 2. Its expansion in northern British Columbia. This will directly help transform our country into an energy superpower. This project will double LNG Canada's production capacity and make it the second largest liquefied natural gas facility of its kind in the world. It will diversify our trading partners, help meet global demand for secure, low-carbon energy, and support tens of thousands of new high-paying careers. And leveraging Canada's sustainable advantage, its emissions are projected to be 35% lower than the world's best-performing LNG facilities, and 60% lower than the global average. Second project is the Darlington New Nuclear Phase 1. This project will make Canada the first G7 country to have an operational small modular nuclear reactor. It will drive $500 million annually, every year, into Ontario's nuclear supply chain. Once complete, Darlington's first of 4 planned SMR units will provide reliable, affordable, clean power to 300,000 homes, while sustaining 3,700 jobs every year over the next 65 years. And all of that in addition to 18,000 skilled trade jobs during construction. At its full potential, Darlington's SMRs will provide enough electricity to reliably and safely power 1.2 million homes, more than the total number of households in Edmonton and Calgary combined. And by moving early and at scale, we can take advantage of Canadian expertise to build value chains here at home, maximizing the number of jobs for our skilled trades and engineers. Troisièmement, le terminal de Contrecœur.
From Contrecœur Port. Exports will be national interest great projects to diversify the economy, creating new markets for the Canadian businesses. This is why, to collaborate with the Port of Montreal to move forward this project. This project will create 5,000 jobs and also another 1,000 of jobs during the exploiting. this project, $40 billion. And especially that project to export towards new markets.
We know that critical minerals and mining are industries of national interest in and of themselves because they can reinforce our prosperity, build our security, diversify our markets, and advance reconciliation. And to these ends, we are referring the McKinvena Bay Foran Copper Mine in east central Saskatchewan and the Red Chris Copper and Gold Mine in northwestern BC. Foran will strengthen Canada's position as a global supplier of critical minerals for clean energy, advanced manufacturing, and modern infrastructure. It'll create 400 jobs, boost the local economies in Saskatchewan and Quebec, where the copper will be smelted, and is expected to be the first net zero copper project in Canada. In northwestern BC, the Red Chris Copper and Gold Mine will be another carbon-neutral copper mine, increasing Canada's copper production by more than 15%. It'll employ around 1,500 workers at peak during construction and 800 during operations. It will reduce greenhouse gas emissions by over 70%. Working in close collaboration with the Tahltan Nation, it's an important step in reconciliation and further developing the potential of northern BC. And it's part of a bigger package, because relatedly, we're also tasking the office to begin close consideration of the proposed new Northwest Critical Conservation Corridor. This is an initiative that presents multiple opportunities for critical minerals development and clean power transmission, including potential interties to the Yukon and Alberta. It's a project, it's an initiative that has the prospect of significant Indigenous project leadership, while creating a potential conservation area the size of Greece. Combined, these 5 projects will generate more than $60 billion for the Canadian economy and create tens of thousands of high-paying careers for our workers. But as I said at the outset, and I will continue to stress, these 5 projects are just the beginning. Canada's new government also believes that there are several strategies that can be truly transformative for our country. Transformative because they help to connect our regions, because they help unlock our potential across a range of products and markets and technologies. But these strategies are also at an earlier stage, and they require further development. We want to accelerate that development. So today I'm asking Don's team at the Major Project Office to create a business development unit to work with proponents on these transformative strategies to assess how quickly we can transform their potential into reality. And I want to go through these strategies. First, the Major Projects Office will dedicate itself to the development of regulations, financing, structure, and value chains to accelerate Canada's overall production and processing of highly strategic critical minerals. Opportunities include Ontario's Ring of Fire, the mineral-rich Slave geological area in the Northwest Territories, and the Labrador Trough, La Fosse du Labrador, shared by Quebec and Labrador. From first-mile infrastructure that surfaces these opportunities from our land to last-mile connections that link these projects to reliable long-term purchasers around the world, we can build the bridge from mine to magnet, turning raw potential into engines of resilient industry, of clean power, and enhanced security for our country. Secondly, the Major Projects Office will examine how to advance large-scale clean power with the Wind West Atlantic Energy. This Nova Scotia-based project will transform Atlantic Canada's energy supply, electricity supply, and create enormous opportunities for new industries and export markets. It has the full potential to produce 60 gigawatts of clean electricity, equivalent to over 1/4 of Canada's entire demand. It's part of a broader Energy East partnership amongst the Atlantic provinces. And with Wind West, this partnership could include important interties between New Brunswick, Nova Scotia, and Newfoundland. Transmission cables between PEI and New Brunswick and Newfoundland could develop the next phase of Labrador's work with Churchill Falls and Gull Island. Third, we're also referring the Pathways or Pathways Plus project to the Major Projects Office. Pathways is an Alberta-based carbon capture, utilization, and storage project, which could achieve enormous emissions reductions, taking the equivalent of the emissions of 90% of all the cars and trucks in Alberta off the road, all while facilitating new growth in the oil sands. By pairing investments in Pathways with a new pipeline to a variety of markets. Pathways represents the opportunity to create a major new industry in carbon capture and storage, and an essential technology for global decarbonization. Our plan for major nation-building projects is anchored in new corridors that connect our economy, enhance our security, and build transportation networks across this vast country and to the wider world. And that's why we're referring the Arctic Economic and Security Corridor, a new Arctic port and all-weather road and port infrastructure that will link Nunavut, Northwest Territories, and the Prairie provinces. The Arctic Corridor will open up promising advanced stage mineral projects through critical links from port to port to port. And with increasingly open Arctic waters, rapid advances in cyber, artificial intelligence, and quantum, paired with advanced missile capacities of our adversaries, we can no longer rely on our geography to protect us. We must fortify Canada's sovereignty and our security in the Arctic. We'll do that in two ways. By creating a new port at Grays Bay and unlocking our resources, we can assert our economic sovereignty while building our defenses. Fifth, we are referring Port of Churchill Plus as part of a larger vision to unlock Indigenous-owned energy and transportation corridor in Manitoba. With proposals for port upgrades, upgrades to rail, an energy corridor, and marine ice-breaking capability, the port would offer an alternative to West and East Coast routes, reduce Canada's reliance on a single energy corridor, and generate more than $1 billion annually in economic activity. This project would be developed in close cooperation with Manitoba's new Crown Indigenous Corporation. Sixièmement, j'ai aussi demandé au Bureau des grands projets de travailler avec
and also did ask for the great project to work all together, so like that we can start to build the new railway network for the next 4 years instead of 8 years. The first high-speed train in Canada will go very fast and allow the travelers to gain time between Montreal and Toronto corridor. It's also a project that will create 51,000 jobs and will inject $35 billion of new money in the Canadian economy. And also will reduce the green gas by 25 million tons.
To begin assisting in the development of a Canadian sovereign cloud. This would build compute capacity and data centers that we need to underpin Canada's competitiveness, to protect our security, and to boost our independence and sovereignty. This will give Canada independent control over advanced computing power, while reinforcing our leadership in AI and quantum. Taken together, these projects can deliver transformational benefits to Canadians, driving growth in jobs and incomes for decades, diversifying our energy sources and our markets, connecting our country, and connecting our country with the world. Since being elected, we have moved at pace to pass this legislation, to establish the Major Projects Office, to identify the first tranche of projects and these strategies. We've started as we mean to go on, and we are just beginning. Because we know, Canadians know, that we can give ourselves far more than any foreign government can ever take away, and that we will build the brighter future for a confident Canada. Nous allons bâtir de grandes choses pour les Canadiens et Canadiennes, d'une ampleur et une vitesse.
With a speed that was not known before. And it's only a beginning.
Canada itself is a project. It's a project built and improved by the strength of its people. We've connected a landmass that spans almost 5,000 kilometers. We've built ports that unlock trade with new markets and reliable partners across the world's oceans. We built new seaways to realize the potential of our Great Lakes economy. We've transformed Canada into a strong nation, a nation whose best chapters are still to be written. We've built big things before as Canadians, and we will again. Now, this is a moment of big disruption and profound change. We bear the same responsibilities as those became before us, and we should hold the same ambitions. To become the strongest economy in the G7, Canada must act now, invest now, precisely when it's hard. And by moving forward today, we won't just catalyze new ports, energy corridors, other engines of progress. We'll also open the bounds of Canada's imagination about the future that we can build for each other. Dawn told me just the other day that she's already received, and you've been there 11 days, so this would have been 8 days in, you'd already received hundreds of emails filled with ideas of future projects that could rise to these standards. Her inbox is proof that Canada is ready. Nous établissons une stratégie économique pour faire.
We do build an economic strategy so like that Canada can be economically independent and also moving toward prosperity. We will build big things and we will give us, the tools to do so. We will surpass our own capacity and we'll build great projects.
Yesterday, I had the privilege, going down memory lane, returning to St. Rose, the school in Edmonton I attended as a child. When I started there, in grade 1, the tar sands, as they were then known, were a curiosity to most. They were a curiosity to most but a few builders and dreamers. But by the time I finished in grade 9, those tar sands have been transformed into the oil sands, transformed into one of Canada's largest industries through the brilliance of our scientists, the drive of our entrepreneurs, the support of governments, and above all, by the dedication of our skilled workers. And today's students at St. Rose, like their peers across the country, are full of hope, ideas, and energy for Canada's future. Now, we're beginning to realize that promise, taking control of our future by thinking big, by acting fast, and by building Canada strong. Thank you very much.
We've been listening to the Prime Minister. He's speaking in Edmonton. The Prime Minister speaking in Edmonton at this hour, making a wide-ranging announcement on projects that Ottawa will invest in as part of its nation building. So the announcement includes a number of different things. They want to get the shovels in the ground faster. The approvals process will shrink. At the top of the list, an expansion of Canada's ability to export natural gas to the world, so LNG Canada Phase 2. The facility on the West Coast will be expanded to allow for that. As part of a second project, a small modular nuclear reactor will get money. That'll be built in Darlington, Ontario. An expansion of the Port of Montreal called the Contrecoeur Terminal. That'll get some money as well. A copper mine project in Saskatchewan will be funded. And copper, of course, being a critical resource on many levels, as well as an expansion of the Red Chris mine in BC, which produces both copper and gold. So again, a wide-ranging announcement. We'll discuss this more in the afternoon. Let's get back to market call. We have some new top picks from Martin Cobb, who's been patiently waiting to share those for a little while. So Martin, let's go through a couple of these. We're going to start with automatic data processing, ADP, on the NASDAQ. Why do you like them? Some are concerned about some of these software businesses being eaten up by AI.
Yeah, and this is another one where, there are those threats, certainly, but, ADP, as it's called, processes roughly 1 in 6 paychecks for North American workers. It handles $2.5 trillion of clients' money every year. So yes, there are competitive threats. There have been from a number of providers, but this is a trusted, outsourcer that you really don't care too much about in terms of the price that they charge, because they're very efficient, but ultimately is embedded within your organization. Ever increasing regulatory changes, payroll taxes, etc., all drives industry growth. These guys take more than market in terms of share. We like it, double-digit earnings per share growth. Not a down year in revenues, even during the global financial crisis this century. So this is a formidable beast. A high 20s multiple is about right. And
their product is used around the world, not just North America?
Yes, they have over 1 million clients in 140 countries, but North America is 80% plus of the business. So it's a US company, really.
Got it. Let's get to your second pick, which is Lind, which does gases used for healthcare.
Healthcare, petrochemicals, food manufacturing. So they distill air. It's not very sexy. They basically just cool it down, take off the nitrogen, oxygen, argon. They provide processed gases like hydrogen to a range of industries. They're embedded within their clients. So they build the plant next door to the BASFs of the world or the semiconductor manufacturers, and they have a contract typically for 30 years, take or pay. It doesn't matter if they actually provide the product. They will be guaranteed, a payment level over the next 30 years, because these are mission critical gases that are very small part of the overall customer's costs, but reliability is absolutely key. They're the world's number one, by far the most efficient, the highest margins, long-term secular growth, and in a great industry. Areas like hydrogen, carbon capture, that's also new legs of growth for them. So we like those guys.
And carbon capture, which is something the Prime Minister also referred to, is an expanding technology. I mean, when they first started talking about it, they weren't so sure it was going to work.
Yeah, no, and there's lots of different science out there and how you do it. So we're not quite sure which one will prevail. But ultimately, these guys have a product and a technology that can be used in that, alongside what they're doing with existing customers. So your petrochemicals plant, you get your oxygen provided by Linde. They can actually do the carbon capture at the other end. So they're very well positioned for whatever technology really comes through.
Your last pick is interesting as well, because it's OpenText, which is based in Canada, but recently replaced the CEO.
Yeah.
So is there something that the new CEO has shared that you have found interesting?
I like quality businesses. OpenText is not a high-quality business, struggles for organic growth. What I really would like, and what I'm going to do, there's a book written by William Thorndike called The Outsiders. Now, this wasn't made into a movie with Tom Cruise and Rob Lowe, just to be clear.
That's the other Outsiders.
That's the other Outsiders by S.E. Hinton. And it talks about capital allocation. The new CEO, whoever he or she will be, will inherit a company with a 10% plus free cash flow yield. If they could just get away from trying to stop worrying about organic growth, which all the investment analysts write about, and just buy back their shares, they can buy back the entirety of the company in less than 10 years. So I might send the book, actually I will send the book to the new CEO when they're appointed and say, read this, every CEO should read this, it's about capital allocation. When you have that level of free cash flow and that depressed valuation, you can make yourself and your shareholders very wealthy. Okay, so obviously they still have to go through the process of picking a CEO. That will take some time. Yep. And in the interim period, sort of what do they do? Well, they have an interim CEO who's been with the company for 25 years, so it's business as usual. This is a company that has lots of different products. It sells basically software that allows you to understand what your outputs of your measurable outputs of a business does. So there's a lot of annual recurring revenues that just continue on. So there's nothing big strategic to be done. I say the capital allocation opportunity for the new CEO to undertake, to me, is very compelling for this. I say a double-digit free cash flow yield, that's a good point to start. Martin Cobb, thank you for coming in, and thanks for waiting patiently while we went through the announcement coming out of Edmonton. We'll see you again soon. Okay, thank you.
We'll have a quick look at the markets and take a look at where we are landing this hour. Just before we hit a break, the TSX Composite has moved up 216 points. So again, in record territory, it's hit an intraday high here, up 0.75% The S&P 500 up almost 50 points today and up about the same. The NASDAQ Composite shooting up as well, 135 points, 0.6%. So all of them, again, reaching for a record today in North America. Thanks for joining us today on Market Call. We will see you again tomorrow.